Well, look, I think that much of the attention, we had a bit of a crescendo around Davos earlier this year about ESG and sustainable investing, where industry participants, governments, supranationals really started to get very much behind and bring that into their narrative. I think that the attention is obviously shifted towards COVID, and very importantly so. Our attention needs to be on people, on finding a cure, and making sure that the people and the economies are supported through that journey. But I don't think that it really changes much from a sustainability perspective. I mean, the way that we think about it in Barclays Private Bank, sustainability isn't a trend. It's not an asset allocation. It's not a sector. It's something that is the next evolution in terms of the way that investors are putting their money to work. And we've seen a lot of evidence of that. It's not a new topic. It's simply a topic that's becoming much more mainstream and quasi-institutionalized. If we think back even against the flows into the sustainable type strategies in 2019, what we saw is there was 120 billion euro in a European context going into those funds just last year. That's about almost a 60% increase. And in fact, in Q1, despite much of the disturbances that we're seeing, the fact is that those inflows into sustainable type strategies continue to flow very, very robustly, about 50 billion in Q1. So we have a real confidence that sustainability, as I said, it's not about a topic or a fad or a new trend or how people should allocate their money. It really is about a different way of investing. And we heard this from our clients. In 2019, we actually backed a survey of over 450 clients around the world. And what we focused on is getting their feedback on what they were interested in. And what we noticed is that there was a real dichotomy between how investors, and in fact, of the respondents, over 72% of them, we think that's higher now, said that they were very interested in how their money was being put to work and ESG criteria being incorporated and how their dollars were effectively affecting the world. To contrast that and to put the onus back on the private banking, wealth management, even asset management industries, we still have a ways to go. In similar feedback from advisors, only about 30% of advisors had incorporated properly ESG criteria into that. So we have a way of helping investors meet that fundamentally unmet need. And a big part of that is really debunking some of the myths that there's a trade-off there.